Hi, welcome to the Oak Trader Report on the 16th of March. Some of these charts are put together on the 16th and 17th, and they were recorded at about 4 o'clock in the morning Hong Kong time on the 18th, so around 3 o'clock in the afternoon on the 17th American time. Just starting off here with cocoa and some of the commodities. It looks like a long-term trend has been broken here quite significantly. The sideways trend has been broken as well, and if this was a false move in terms of out of this sideways consolidation area of where my mouse was, I believe that this consolidation would have come down a lot more by now. So I suspect that the market is going to spike upwards over the next couple of months, and cocoa will reach a climax sometime in the next 3 months. But it looks to be very bullish from here. It looks to be building momentum. Of course, perhaps subject to a small setback, but I think the odds are very heavily in favour of cocoa going much higher from here. You can see it here on the monthly. The big distribution and the downtrend. It's had a very long-term bullish trend since 2001. A lot of the areas where cocoa grows are in countries that aren't necessarily that stable, so spikes can develop due to weather and also political instability. But apart from all of that, it just looks like it's going to spike up again here. But again, I wouldn't necessarily put any huge amounts of money into this because of where it is in the cycle. It's coming to the end, I believe, of its bull movement, so it's not at the beginning or the midway point. So whenever a market's coming to the end of its bull market, there are very wild swings, so it's not for the faint-hearted. Sugar number 11, talked about this about, I believe it was 5 months ago. I thought this movement here potentially was forming a bottom, and it did come up nicely. I did say as well that the foundation hadn't been built for a sustainable bottom. To me it looks like here it's had a rally, but it looks like it's going to head lower from this weekly chart back down to around the 15 level, and I'll show it to you on the monthly as well. The 15 level would put the market around here where my mouse is, and if you draw a long-term trend line touching this low, this low, this low, and move it all the way up, about 15 is the right area. Sometimes it does go lower than that, but around 14 or 15 I think is where Sugar 11 will settle at, and it will probably be quite a good buy long term from there. But I think it's one of those markets that you've got to give more time to settle down, and I think there's some more downside to come and some more foundation building needed before any sort of sustainable rally could be seen in sugar. But we've seen markets, if you look where my mouse is here, where it had a double spike upwards. This market, when volatile, can spike much higher, so it's one of those that I wouldn't necessarily be shorting it. It's just my opinion that it's going down to around 14 or 15. Crude oil Brent, I'm quite negative on crude oil. This is the international crude that most countries in Europe and Russia and Asia tend to look at, rather than the Cushing Oklahoma crude. And you can see here it is developing, and it has had some support here, and it is becoming tighter. But you can see here each time the highs where my mouse is, this high, this high, this high, this high, each one has been lower. Now that could be the Pavlov dog technique, training, that each time it spikes it doesn't sustain it and it's acting weak. But generally when the pattern occurs for quite a long time, it signals distribution in the market, and I feel that this market has the potential to go much lower. Not sure if I'd trade it. You see this point here where my mouse is, that's the point I would use more than likely to short the market. If it breaks that point there and closes below it, I may take a short position. But I do believe on the probability side, and with what's happening and some of the touting that I'm seeing going on, I think the odds are that the crude oil Brent market will move lower from here and we'll see the price come down to around 90 in the next month or so. You can see it here on the monthly, some of the wide swings down, the market being supported but couldn't break above it. If it did break above, you see where my mouse is here, if you draw a line, if you use that as your get out of jail card, so to speak, if you did short the market and it did move above that line, don't hold on, just close out and go flat the market. But I do believe the odds and the probabilities are suggesting that the crude oil Brent market are going to go down. Palladium, another market I feel that's going to go down. If you look at it here on the daily nearest chart over a year, you can see some wild swings here up and down. The market never used to be like this 10-15 years ago. But you can see here it has broken somewhat. If you draw a line here, and this area here is consolidating, so it has broken that. Is it a false move? Potentially, and if it's a real move, it will close above 780 and move up. But I don't know, I just get a feeling that this is some type of false move out of the consolidation area, and it's tricking people that it's time to go long. But in reality, I believe that a bear market's not too far away in palladium. And if you look at it here, you draw a line, it has broken up, which is sometimes significant, and I do tend to go by the price action, so I can't form a definite opinion about where this market is going, but I believe that potentially that this is a false move out of the consolidation area. But with this little bit of consolidation going here, if it does close above 780, again, I wouldn't be surprised to see it move up to 800, 850 in a spike. But I don't think it will last, and I think it will be a short-term upward move, and I believe eventually the market's going to come right down. And if you draw a line across from here to here, again it's just broken upwards. So this is why I'm undecided, and it does look like quite a nice triangle here, but you see this, it looks quite compact, but these are $50 gaps. I mean, it doesn't seem like much these days, $50 gaps, because of how wild the market's been in the last 3 or 4 years. But when I was trading commodities back in 95, 96, 94, a $50 gap on a palladium chart would have seemed improbable, to say the least. But it has kept above. If you draw a line here at 700, this consolidation area has mostly kept above 700, which is showing good support. So I'm still undecided with this market here. Instinctively, I always sometimes think something's a false move to send people the wrong way in the market and catch them out. Just potentially like this spike here, you can see it where it's sideways and then it spikes upwards, and then all of a sudden, over the next 6 weeks, the market is hammered. It goes from 850 to 550. And that's how the commodities market can work sometimes. So you have to be extremely careful and ready to go flat the market if you've made the wrong choice. This is it on a monthly. You can see when I'm talking about back in 94, 95, 96, look how quiet the market was. And beautiful bear market developed into consolidation, base action, and gradual downtrends being broken for the bull market to begin in around 97, and it went all the way from pretty much 100 all the way up to 1,000. Had a huge rise. It never had a huge rise back in the 2007 bull market that crude oil participated in. It's a little bit like the cattle market, the meat market at the moment. That's in a bull market, and the agricultural's in a bear market. So you can still have some commodities going up whilst other commodities are going down. But to me, I'm still a little bit undecided here, because it has broken up out of this consolidation area. But again, look at this consolidation area where my mouse is, where it breaks up and it crashes. Is the same thing going to happen in palladium? Potentially, yes. I think that there is a chance that may happen. I mean, it's had quite a significant rise from 2008, 2009, going from around 160 all the way up to 850 on a percentage level, that's a pretty damn good move. You know, somewhere around, you know, if you drew a line around 400 to 500, wouldn't be an unreasonable level for palladium over the next year or two. And I know it will bankrupt a lot of miners if the price does drop down that low to 450, 500. But I think it's got a good chance of doing that. And to me, this area here where my mouse is does appear to be distribution, but on the other hand, it didn't have a parabolic spike, for example, like this. That had a parabolic spike before the distribution. This hasn't had the parabolic spike, so maybe that's what's got to come first before a bear market is created. You know, if you read Wyckoff's books written in the 1920s and 30s, How to Create a Bear Market, he talks about the parabolic spike movements, and then the quick switches around after a couple of weeks or 2 months, and they catch people on the wrong side of the market, and the market gets hammered and goes down. But to create a severe bear market, you've got to have prices really moving up, you know, if you want the bear market to be volatile and quick. But it could just be an end of a distribution cycle here. We'll have to see. The palladium market is pretty much dominated by Russia and South Africa. America produces a fair amount of palladium, but no one knows how much palladium there is in the world. It's a state secret in Russia. They don't reveal how much palladium they've got. They keep a lot of it in Switzerland. I'm sure a lot of the information is leaked out. It's a little bit like the diamond market. It's very opaque, but palladium is a contracted tradable commodity, and there should be more transparency in the market. I wouldn't be surprised if, you know, the Russians had thousands of tons of it stored away, and if the market knew that, it could collapse fairly easily. But yeah, again, we'll just have to wait and see. But if you look here with palladium, that market has come off significantly already. I remember back in the day, platinum was the main bull market, whereas palladium was lagging platinum back in 2006, 2007. You see, when this spike came from 1300 to 2003, in the palladium market, it hardly reacted at all. It didn't have the same bull market that platinum had. It wasn't as strong. But you can see the sell-off that it had here in the market. To me, this looks like a distribution triangle, and it looks like it's going to drop lower. My longer term prediction for platinum, draw a line along here, touch this line, I'd say it would settle around the $1,000 to $1,100 level over the next 6 months to a year, and potentially maybe even a bit lower than that, maybe around 900. But it's had a good run over the last 10 years or so, and I think it's got a good chance of moving lower from here. This looks like a distribution triangle to me. It may take a couple of months to play out, but once the downtrend moves start, I think it would get to around the $1,000 level quite easily. High grade copper, another one here that looked like it was building a bit of support. Longer term, this move here, this sideways action, you can see it didn't break above that, the 340 level. It's come crashing off over the last 10-15 days, and especially over the last 2 weeks you can see it being hammered down. I think this has a real risk of going much lower from here. A lot of people have been convinced falsely by false fundamentals in the copper market. There's a hell of a lot of copper stashed in Russia and China. It's used as a loan backer in China for underground loans. People will set aside a certain tonnage of copper to take a loan, which is a stupid thing to do, really. A lot of the people have been doing it because copper's held its price and it's been quite high. But if you look back throughout history, whenever loans are backed by volatile commodities, it doesn't end up well. But you can see the 1 point, the 2 point, the 3 point. If it breaks these two pivotal points here at 3, which it looks to me like it will, I think we could see quite a violent downtrend developing here. And if you are long the copper market, I would get out personally. That's personally what I would do. But you draw a line along here, you can see the distribution triangle that's developed. And to me, this looks like some of the charts in 1929, 1930, and this looks set for a big distribution and a big bear trend to develop in copper. And I think it would probably settle at around the 1.82 level, 1.6 maybe, the old highs of the old contracts. So just above this consolidation area, just above this where my mouse is, and just above this as well. So I think, you know, it's got the potential to go to around 160 here. People might think that's insane, but I'm basing my prediction and judgment off the distribution here in the market. I could be wrong. I mean, commodity markets are you know, with the right type of organisation and commitment, can be very easily manipulated. But I think, you know, politically at the moment, the environment's not there to do that like it was in 2005, 2006. And I think a lot of the players in the market see the benefits in bringing down commodity prices. You know, it's going to hurt Russia, it's going to hurt China. Their economies, the economy in Russia, the Chinese have been working on diversifying their economy away from exports. And there's a bit of hope there that potentially they may be able to do that. But with Russia, you know, commodities is the be-all and the end-all really of the Russian economy, you know, weapons and commodities. Putin's no great shakes. You look at the commodity bull market over the last, say, 12, 14 years, the beginning of Putin's presidency, anyone could have managed Russia's economy during that period and done much, much better than he's done. So we'll wait and see how he manages the Russian economy when the copper price is sitting at around 160, 180, perhaps crude oil, Brent oil is sitting at around the $70 mark. He's going to be in a lot of trouble, and perhaps the Europeans turn off. Instead of buying, say, 30% of their gas from Russia, they edge it down to perhaps 15 or 10%, and that kills them on the revenue side as well. So there's a lot of different things that can happen to the Russian economy that are all negative over the next 6 months or a year. So don't get into the mindset of value buying just yet. You know, there's not blood on the streets, that's for sure. You know, wait till there's blood on the streets in terms of violent protests in Moscow, new administration coming in, then perhaps would be the time to buy. But now is not the time to buy. FDI in Russia, even if the problem is sorted out tomorrow, in terms of a satisfactory withdrawal back to the base in Sevastopol and the Crimea going back to the Ukraine, we all know that's not going to happen now. People who have between, say, $1 and $10 million to invest are not going to go anywhere near Russia. They might play around with, you know, a very small amount in ETFs, but in terms of direct investments, your perpetual travellers, your previous taxpayers, those types of guys going over to Russia and feeling comfortable investing $5-6 million, those days are over. The game is up. No one wants to do that anymore. And in 6 months or a year, the only people that are going to be investing in Russia are large corporates, and that might be enough for them to tick along, depending on where the commodity prices are, just about. But they've destroyed the chance of their economy building up and building a base of entrepreneurs from the West coming into Russia. And I'm not talking about corporates, I'm talking about guys coming in there, like in Thailand, other expat destinations, you know, that have benefited from expats coming in there, investing a bit of money and building businesses and the country. But Russia, I'm afraid, just won't get that, because people have been put off by the events of the last 3-4 years, and the annexation of Crimea, which looks like it's going ahead, is just one step too far. Because who wants to have their money in a country where sanctions are coming, where company kidnap of documents is commonplace. I have met lots of different people, for example, that have invested in a country, say like Thailand, and then I meet people who have invested in a country like Russia. There's no comparison to the experiences. Things can go wrong, that's for sure, in Thailand. But in terms of endemic corruption, Russia is far more dangerous than investing in a country, say like Thailand. Things might look good in terms of the tax rate, the overall procedure of the official documents, but nothing works along official lines. If someone with power wants to seize your assets, they will, and no one's going to stop them. And here's gold. I believe gold is going down lower from here. I said in a broadcast that we could see the spike. We've seen the spike. I think easily it will come back down to the 1200 level. Personally, I think gold's going to settle up at around $1,900 and then reconsolidate from there. And I would be very, very wary if you're long gold at the moment. It's a sucker's game. China's buying up gold to strengthen the yuan. There's a lot of sucker broadcasts going out at the moment. Don't get suckered in, to what's going on in the world at the moment, and buy gold. I'm not saying gold isn't something you should hold in a very small way and for the long term, but there's price adjustments, I believe, coming to gold. And if you were to buy gold, I think it's better to wait till the correction is done and perhaps reaccumulate at around the 900 to 1,000 level in about 6 months' time. I know that goes against the train of thought out there, with the public, because of everyone's dissatisfaction with money printing and what's gone on in the American economy over the last 12, 13 years. But I believe that the gold price is going to come down much more from where it is now. And I've been saying this, if you go back to previous broadcasts, back at the $1,600 level, back at the $1,400 level. So I've been a long-term bear really since the mid part of 2011. Cycles change, and I'm not saying that this is the long-term cycle for gold. It looks like a mid-term cycle, potentially in a longer-term bull run. But you look here, I think the market has a very good chance of coming back to around 1100, 1000, just from the way it's being set up psychologically with the public. So I'd be very, very wary if you're long gold at the moment, futures-wise, and I'd be looking to be extremely careful about that position. Sure, I said to you before recently, when I said it could spike up, that it may go to 1500. Time in the market to within weeks is not easy. No one has that answer. But longer term, I think the market is very bearish. And if you draw a line here, I think that's the limit of this move that we'd see would be around 1500, and I don't think we'd see it much higher. But I've got a feeling it's going to top out about 1400, maybe even the level it's at now, and just carry on moving down to 1200. And then from 1200 we could have a couple of weeks of consolidation, and then it slams down to 900 or 1000. And that's a prediction. That's all it is. The milk market, you can see the beautiful accumulation, the drop down, almost like a head and shoulders, the bull market developing, breaking up. I would say it's probably got a big spike to come, and after that big spike, or during the big spike, is the time to unload your positions. But it looks like the time to unload positions is coming very soon, so keep your beady eyes open for that. Beautiful movement in the hog market, the gradual trend upwards, breaking into a parabolic move. Be very wary of this market now. I suspect that it's going to spike higher, but distribution will come soon, and this market, as always, will develop a distribution level and come back down again. But it looks like it's reached a new channel now. The channel will be from 80 to perhaps around 130. Right, the old battery's running out. I will put up a couple more in the ensuing days. You've got feeder cattle here breaking out of the channel upwards. Very powerful movement as corn and wheat have come down. The feeder cattle market and the milk market have gone up. Again, it looks to be reaching a level, I think around the 180 level, 190, we could see the end of this bull market. I don't think it's there just quite yet. It's really building parabolic movements. Again, it's very dangerous to trade markets during their latter cycles because they do become extremely volatile. And you can see here with the cattle market, just wanted to show you the percentage gain. From 1999 it's gone up from 60, and here in 2012 basically it reached 100% in terms of its movement upward. I mean, gold during its bull market was up over 600%. Live cattle in its commodity bull market barely went up 100% over 10-12 years. So I think this market may have some legs yet, like the feeder cattle market, and move up to around 150, 160 before we see a sell-off. But again, it's dangerous at these cycles. But if you just look at the percentage gains, you're looking at around 150%. That's nothing for farmers, but it could all be solved as well by the American government by bringing in more imports from Brazil and Australia. A lot of the farmers are protected by tariffs. I just wanted to show you this. This is the Russians that they've been encircling Ukraine. It's a very good graphic. Take time to read it. It's a good website, good guy that put it together. But you can have a look at that. And then these are the areas in the South China Sea where China's got problems with other countries like Vietnam, the Philippines, Indonesia, and you can see the area that they're claiming. And this is another flashpoint in the world. It seems we've got them all over the place now. The Middle East divisions between the Sunnis and Shiites, and even the Alawites are at extreme levels. You've got China, you know, that's at a pivotal place at the moment, depending on what they do.